Having a good Tuesday morning. And we'll get right into this. Shalom. Happy dogs. Hope you're having a good Tuesday. And I certainly hope it's more peaceful where you are than what I've had to endure this morning, and as all people around me have. Yet another series of rocket attacks and whatnot in the area. And all that is, once again, just as I was looking at the Bitcoin charts, actually. And yeah, sometimes when you hear the booms, it's not just the price of Bitcoin going up or whatever. Right? Unfortunately, there are places where the booms are quite dangerous. And sometimes, yeah. So anyway, back to the orange coin, right? What is going on? Well, orange coin today, Bitcoin has a fairly tight, I'm just kidding, a pretty wide range on the central daily range of the VRE. It's like 1.8% of the assets worth. So technically it's still under like the 2% threshold to be a trending day. But at the same time, it is pretty wide. And so you could certainly see trending moves be capped pretty tightly and lead to what could even be some nice ranging moves. But it is still technically under the 2% threshold. Now, what is that? What does that mean technically still under the 2%? Is that some objective number that can never be broken or something? No, it's not. It is a number where we find statistically that when the asset has a relatively tight range of 2% or less than the asset's value, you typically have a trending day. And when it's more than 2% of the asset's value, when the central daily range is wider than 2% of the asset's value, then it is typically a ranging day. What is the difference between a trending day and a ranging day? The difference between a trending day and a ranging day is the overall movement that the returns will deliver and that the price action will generally follow. So if generally the returns on the day will deliver trending moves to the upside, price action will generally follow that way. Right? If it's to the downside, price action will follow that way in trending moves. If it's a ranging day, you're basically likely to see the price go back and forth between certain ranges. Now, it can range throughout the day, and obviously it can end up in a very different place from where it began. Oh, hello. Hello. I see your message. It can start the ranging day in one place and end the day in a very different place from where it began because of the various ranging moves that it makes. Just like it can start a trending day in one place and end that trending day in a very different place from where it began because of the trending moves. Obviously, it can also start a trending day in one place and end back pretty much in the same place where it began, because you could have two very significant trending moves or multiple trending moves, and it could end up back kind of where it began. Just kind of like last week, we saw trending moves to the downside, and then Friday and Saturday, Sunday, trending moves back to the upside, which made the weekly candle looked like a long, thin wick with a little pancake in the middle, and you could barely see it, right? It was like a 0.07% gain for the week, right? But the move for the week overall was more than an 8% range from the bottom to the top of the wick. It was like 8.7% or something like that, which if you do the math, 8.6%, 8 point whatever the hell, more than 8%, right? So just more than 8%, if you had managed to catch the move up, the move all the way down, and then the move back up again, right? That's more than like 16% in gains. Now, of course, you have to sleep, so you probably didn't catch all those moves, which you could see, but still, an 8% range gives scalpers quite a lot to trade on for the week. And the beauty of that kind of action is when you look at the lower time frames, it was not just going up and then all the way down and then all the way back up again, right? It doesn't work like that. There's a lot of movement up and down constantly, right? Because the returns are constantly on different time frames distributing away from the means of returns and then mean reverting to the means of returns, right? Which means that there's a lot of scalping action to be had, which means, a trader who was trading properly could have made easily more than 16% gains, right, without leverage, right? Just by trading the available trades, that are available throughout the day. And yes, they're even available, when it seems like when you zoom out and your candles look flat, like on the 15-minute or whatever, and they look flat for hours, and you're like, oh, it only moved 0.3% on this 15-minute candle, or 0.16% or 0.05%. Yeah, zoom into it. Look at it. You'll see it probably moved more than 0.1% in a 15-minute candle. Now, why does that matter? Well, how am I going to make money on 0.1%? Well, it depends on your position size, right? Depends on your time frame, your runway, the fees you pay, right? A lot depends on different contexts. That's why you need to know your different contexts inside and out, so that you don't have to ask yourself that question a million times. How do I make money doing this? If you don't know how to make money trading an asset, you should stop trading it and figure out first, how can you make money given your context running trades, right? There should be assets that you can trade. It doesn't have to be Bitcoin. It could be anything, right? You might like Bitcoin, you might like trading it, but maybe you're not so good at it. Maybe you're losing most of your trades, in which case you should not trade it. Maybe you're too emotionally attached to your trades for whatever reason. Then you should not be trading it, right? Trade things that you don't really care about when it comes to trading. Like me personally, I love Bitcoin. I think it's fantastic. I hope it goes to the moon, whatever. But I don't care about it as an asset in terms of trading. Like, I have zero emotional attachment to it as an asset when it comes to trading, okay? I don't care if it goes up or down. I just don't, right? You have to learn to let go. Hello. The king says hello. Oh, hi. Hi, the king. And who else is here? I see a bunch of people in here. Hey, folks. Hope you're all having a wonderful, peaceful day. So whatever you're trading, take your profits early and often. Don't stay in trades longer than you need to be. If an asset you're trading suddenly makes a big move and you hit targets, standard deviation targets, Laplace distribution targets, whatever, just take your profit. Take your profit quickly, because Lord knows those things can turn around real quick. Yesterday I saw a move on Bitcoin. Must have been around, I think, like 7:30 a.m. U.S. Eastern Time, something like that, maybe 8:30 a.m. I forget. Anyway, thing jumped up. Yeah, not a huge number, a few $100, but it got right near a target that I said would likely happen. Just shy of like 61.4, I think, or 62.4. I forget the number, but anyway, or 65. I forget, 65.1, whatever. Somewhere in that area. I really honestly don't remember. See, that's the point. I'm not emotionally attached to the asset. And I saw the asset, snap up and come back down, within seconds. Like literally within a second, it was already starting to come back down. Within 10 seconds, it was back to where it had made the snap up. By the end of that second minute candle, it was back up practically to where it had jumped up to. And then on the next candle, it dropped all the way down to where it started from, and then some. And then the next candle after that went even further than it had dropped on that first dropping candle. So, and then it led a move. Basically, that started a move that went to the downside for a good hour and a half, something like that, maybe 2 hours, before it started to move back up again significantly around into when traditional markets had opened. So once traditional markets had opened, you saw a little initial move up and then drop and then back up, and all that was very, very well targeted, and all the targets were hit on the VEPS charts. You can see it very clearly on the VRE charts, and like you'll be able to see today, targets getting hit on the VRE charts. Right? Why? Well, because the VEPs use leading information, right? They don't use lagging information. Why is it that all these retail traders and analysts and people using traditional TA are constantly getting wrecked and complaining about it? It's because they're using lagging information that leaves them clueless. They don't understand how to run trades. Right? They don't get it. They don't understand what leading information is. So if you want to learn that, just head on over to the Alpha Trading Discord, and that is at alphatradinghq.com/discord. Once again, it's alphatradinghq.com/discord. And you can get free access to the volatility starter kit. Just request it in a ticket, which you can make in the request support channel. And you can show up to the live streams. Those start at 9 a.m. U.S. Eastern Time, Monday through Friday. And you can participate in the live streams. It's totally free. You can engage by chat or also by voice. Ask questions, ask any chart you want to see analyzed and charted and all that stuff with the VEPS tools. We'd be happy to do it, as long as that chart has sufficient history, obviously, what to look at. But yeah, come on in, stop in, come learn for free how to trade volatility. That's it, folks. Take care. Happy trading.